Welcome back to Raise Your Wealth. In today's video, we're going to be taking a look at the Betashares Ethical Diversified High Growth ETF, also known by its ticker symbol of DZZF. We're going to be having a look at its composition, some key facts, as well as my final thoughts upon this particular ETF. This is a more recent addition by Betashares, having been re-released back in December of 2020. It's only been out for a few months in conjunction with its counterpart ETF DHHF, which is the Diversified All Growth ETF, which is 100% stocks. And DZZF is an interesting sort of convergence of two major themes in passive investing. On one hand, in recent years, you've had this tendency towards ethical ETFs like ETHI, FAIR, as well as the various other counterparts by Vanguard and so forth. And this is as people become more conscious of things like climate change and sort of the social concerns of certain investing types. And on the other hand, we have the other major theme, which is sort of the tendency towards trying to find an all-in-one ETF to invest in. And this has been popularized in the past few years by Vanguard's own Vanguard Diversified High Growth, also known as VDHG. People looking for sort of this ETF they can just buy and it covers everything. And DZZF tries to combine these two and create something that has both a tendency towards ethical investing as well as being sort of a one-stop shop. For those that are familiar with Raiz Invest, this is basically the Raiz Emerald portfolio cranked up to 11 and put on steroids. Is the most simple way of putting it. It's a fairly aggressive, fairly sort of diversified portfolio that is actually a combination of several Betashares ETFs in its own right. It's a fund of funds. So let's take a little bit of a look at the component ETFs that make up DZZF, as well as to have a little bit of an introduction into ESG screening. As I alluded to earlier, this ETF is actually a combination of several other ETFs in order to create a highly diversified fund of funds. It uses three existing Betashares ETFs in order to do this: ETHI, FAIR, and GBND. Each of these ETFs serves a different role within the DZZF ETF, but they do share one commonality, and that is that they're all ESG screened. And what that means in the simplest terms is that certain industries and sectors are excluded on the basis of being environmentally harmful or socially or ethically hazardous. And this includes industries such as fossil fuels, gambling, firearms, tobacco, among others. And ETHI, the Global Sustainability Leaders ETF, is the primary constituent of DZZF. It comprises of around 54% of the overall weighting of DZZF. I've given a more comprehensive sort of video on ETHI in its own right, so if you need further information, I'll leave a link to it, but I'll go over it again in sort of the simplest terms. And as mentioned, it's ESG screened and it invests in around 200 different companies around the world. And because you're excluding certain sectors like fossil fuels, what happens is the ETF is skewed more towards tech and healthcare and financials. So you have the top holdings being things like Tesla, Apple, Nvidia, MasterCard, PayPal, and companies of that sort of nature. And you have the primary sort of weighting towards the United States, although it does have investments in other countries like Japan, Switzerland, and most of Europe. So you do get a reasonable amount of diversification there, and it's not quite as tech heavy as something like NDQ, which is the NASDAQ 100 ETF. And it has returned above average returns since its inception of over 20% per annum. So it's definitely a good thing that this is the mainstay of DZZF. And moving along to the next component, we have FAIR, which is the Australian Sustainability Leaders ETF. And this is very much, as the name may imply, sort of the local Australian counterpart to ETHI. And it invests along a similar line of avoiding fossil fuels and certain other hazardous industries. And in addition, it abstains from investing in the big four banks. So you won't find any NAB or Commonwealth or ANZ in here, and which is a very interesting sort of discussion because the big four banks make up such a huge part of the ASX 200, and the mining companies like BHP are also sort of titans in their own right. Instead, what you'll find are companies like Telstra, Xero, ResMed, and CSL, sort of to name a few, and there are others that I'll put up on the screen. So as opposed to being very financially top heavy like the ASX 200, you have a fairly reasonable blend of industries. Healthcare is sort of top of the list, but it's by no means overwhelmingly dominant. So that is around 36% of the portfolio. And to round things out, you have GBND. And this is essentially a bond fund. And along similar lines to ETHI and FAIR, it gets bonds from not only sort of locally sourced, but international as well. And these are bonds raised sort of along similar guidelines that it can't be from companies that are fossil fuel providers or engage in business activities that are deemed to be counter ESG. And this ETF sort of serves as the stable base and is the fixed income, I guess, component or defensive asset of DZZF. And it only comprises of around 10% of the main ETF and is probably used just to decrease volatility a bit and sort of smooth the ride, as well as utilized as a way of rebalancing when stocks really drop. I suppose it would be possible to rebalance some of those bonds into stocks. And that's about it for the major constituents. It's interesting to note that you can almost create this portfolio, the DZZF composition, mind you, in Raiz. You have ETHI, you have FAIR. The only thing you'd really be missing are the diversified sustainable bonds in GBND. And you could just substitute another bond fund if you wanted to, and you weren't that concerned with ethical investing. But it is what it is with that anyway. And that gives an overall portfolio composition of 90% stocks, much like VDHG, and 10% bonds, again, much like VDHG. But with all that said, let's move along to some of the key facts of this ETF. DZZF started its life as its current form in December 16th, 2020. It was launched alongside DHHI, VDHHF, which is the Betashares Diversified All Growth ETF. Prior to this, DZZF traded under an entirely different strategy. It was known as the Betashares Diversified Conservative Income ETF and was basically a 180-degree difference from its current form. As such, the assets under management for DZZF are incredibly low right now. It sits at $4.9 million, which for an ETF is incredibly small. To give you a sort of a frame of reference, ETHI, which is one of the component ETFs, has over $1 billion in funds under management, just to give you some sort of perspective. Keep in mind, this has only been around for a few months, so it hasn't really had much time to build up those assets under management and get much traction, but still, it is something to be aware of, just because issuers can close down ETFs that they deem not high volume enough or don't have enough sort of interest in. So something to be cautious of. And if they do dissolve the ETF, you do get your money back, but you don't want to be caught out at an inconvenient time either. Of note, the management fee for this one is surprisingly low at only 0.39%, which is lower than FAIR, which is 0.49%, or ETHI, which is 0.59%. So if you're already buying ETHI and FAIR, this might be a cheaper way for you to do so. The dividend frequency for this one is quarterly, and the dividend reinvestment plan, DRP, is automatic unless you decide to opt out of it. And the share registry for this one is Link Market Services. Keep in mind, as regarding the geographic sort of allocation of this, the majority of this ETF is invested internationally by virtue of ETHI and its sort of outsized weighting in the ETFs, but you're going to have over 30% of your investment still here in Australia, both in the form of FAIR and in part by GBND. One thing to bear in mind is that due to the relative recency of the reformation of this ETF, there is no real relevant performance data out there. It hasn't even existed a year yet, so it's really, really hard to give any meaningful information. I suppose you could take the performance figures of ETHI, FAIR, and GBND, which I'll put up on the screen, and kind of extrapolate from there, but it doesn't give you the whole picture because things can rebalance. Money may sort of skew towards different ETFs within the ETF, depending on how the market's doing. And yeah, it doesn't give you a sort of full picture, but it is a starting point, I guess, anyway. But that's just some of the key info anyway. And yeah, you definitely want to be cautious of that funds under management. It's in my mind a little concerning, especially when you sort of compare it to the other ETFs out there. But those are just my thoughts anyway. I'm going to move along and give my final thoughts on this particular ETF. So in my opinion, DZZF is at a base level a reasonable looking option. It's essentially a socially responsible version of VDHG, and its component ETFs sort of reflect that. For people who are already investing in ETHI and FAIR, it's a reasonable choice in my opinion, and it's another sort of candidate to the increasing lineup of all-in-one ETFs. My main sort of concern is that the funds under management for the ETF are still very, very small, even compared to sort of other recent ETFs. Looking at its sister ETF, sort of DHHF, also released at the same time by Betashares, has currently around 6 times the assets under management of DZZF. So that would be my only sort of personal concern, is that after a given time, if the ETF didn't get enough momentum, that they may sort of close it down for business, and you'd still get your money back and everything like that. But it just doesn't seem like there's very much interest at the moment. But the ETF itself seems fine, and it's kind of perplexing, really. And the only other sort of criticisms that I could level, if any, is that if people were looking for a true all-in-one, they might want something with international exposure to it, which DZZF offers. And by international, I mean emerging international markets like in China, India, and all that sort of thing. But it's easy enough to remedy with having a second ETF like VGE or IAA. And the final sort of thing to consider is some people may sort of question the validity of having bonds in the ETF, and it's the same sort of criticism that's been leveled at VDHG. And for a lot of people, it's probably not going to be an issue, but for some, they're going to be questioning that and not really wanting it. It's going to be a deal breaker for them, and that's fair enough. But those are just my thoughts anyway. Let me know what you think down in the comments below, and whether you own this ETF or plan on purchasing this ETF. I'm going to be doing more ETF videos in the near future. I want to talk about the recent ETF from Betashares, ETH or ETH, and sort of touch on that a bit more. But give me some suggestions for other ETFs to talk about. I've kind of got a list in my head already of about half a dozen that I want to go through. Some of the more newer, more niche ones as opposed to the broad ones like VDHG. But let me know. Tell me what you think. But as always, if you found this video useful or informative, don't forget to like and subscribe. But until next time, my name is Rich, and I will catch you guys in the next one.